Let's go across to Jitendra Sriram, MD and Head of Research at HSBC India. He joins in. Jitendra, hi, morning. It's been a bit of an early Diwali for us, a great time. Between last Diwali and now, the index is up about 25%. What is your, advice to investors at this juncture? Because we do get a lot of messages telling us that we've missed out on a big chunk of this rally. Is it still a good time to get in? What's the sense you're getting?
Well, thank you, Sonia, and very happy Diwali to
Happy Diwali to you as well.
all the viewers of CNBC and the CNBC team as well. Well, in terms of advice, we're definitely constructive on the market from a one-year outlook. We do see that by calendar next year end, we should see the Sensex probably around the 30,000 mark, which is our target for the Sensex. Having said that, yes, maybe, for a near-term one-quarter view, you might see global markets turning more volatile. If you look at this entire correction that has begun from, say, probably around the second week of September or the third week of September, I guess a lot has to do with the fact that, the way European markets have come off from where they were. And that is having a rub-off effect in terms of the flow momentum. But if I look at India overall, most of the report card on the economic side is now turning favorable. We do anticipate that the fiscal deficit that the government has put up, the savings on oil will make it far more easier for the government to achieve that target. Secondly, inflation, the CPI, for example, we do see it coming to the sub 6% mark by end of next year. Current account deficit is also starting to turn, and we do see that despite growth picking up in the next 2 years, we do see it being under the 2% mark as a percentage of GDP. So overall, on all parameters on the economic side, we do see improvement, and as a result, we are constructive on the market here on. So we are recommending people to be overweight India within Asia.
Okay, we have a slew of stock-related questions for you, Jitendra, but let's kick off as a Diwali gift with questions posted on our money control message board. Our boarders can ask you. And this one is a fallout of the announcements made yesterday. Nazia from Amritsar has written to us, and she's asking you, what's your call on Coal India after the Cabinet's pronouncements, recommendations on coal mines yesterday? What's your call? And from my own perspective, do you think that this ministry is at all looking at denationalization?
Well, the first part first, we are constructive on Coal India, and it is among our India top picks overall. But that aside, I don't think yesterday's event per se was material for Coal India. I don't think the event has any rub-off impact on Coal India. I think Coal India is virtually unimpacted by yesterday's decision. What is being talked about is to bring 70 of those 200-odd mines which were cancelled by the Supreme Court back up for auction and so on. Now, one part is, I guess, this nationalization, denationalization issue is more to do with the ruling itself. The executive has to take what the judiciary has recommended, that a lot of this last 20 years of allotment were probably ambiguous because coal was a nationalized commodity. So the starting point has to be that some part or some specific mines need to be taken out of the ambit of nationalization and probably move to some degree of private, to facilitate private ownership. So I guess it's just the first step in clearing the pathway for auction to streamline the whole process of starting the auction. So I don't read too much into it, because I guess whatever Coal India continues to own will remain under state-owned hands. It is only for the purpose of facilitating this auction that all these moves have been done yesterday.
So what's
the
your
good
price
part, I would say, is that
Sorry, I thought you were...
The good part is that the government is actually, showing an urgency in these matters. They're saying that they will probably try to wrap this entire auction process up well before the deadline, within, say, 4 months, against the 6 months that they have. That sense of urgency is quite heartening to see.
Okay, sorry, I just wanted to know if you have a price target for Coal India.
Oh, I don't recollect it offhand, but I think it broadly implied about a 20-21% upside is what I recollect offhand.
Okay, and just to stick with the theme and complete it, do you like any of those stocks that were buffeted when the deallocation happened? Do you like JSPL? Do you like any of the other stocks in the steel power space?
See, on the metal side, we are constructive on the non-ferrous metals more than the ferrous metal side, and probably it's more to do with our global call relating to the price of these commodities. So we are constructive about on names such as Hindalco, Hindustan Zinc, etc. So those the non-ferrous side is something which appeals to us at this point of time.
Okay, by the way, I just want to point out that the Bank Nifty has now hit a fresh record high, so we should pull up the Bank Nifty for you. This month has been great for the Bank Nifty. While the Nifty has been, is down about 0.8% this month, the Bank Nifty is up 6.5%. So that's the kind of outperformance that we've seen from the banking index. Jitendra, what's the sense you're getting about whether banks will be the next leaders of this market? And if yes, what are the banks that you would put your money into now? Would it be, the safer private sector banks, or are you looking at PSUs as well?
Well, firstly, on the banking sector itself, I would say that, this easing of inflation probably makes the glide path for next year far more amenable for the sector as a whole. People will start building in that at some point during next year, RBI may start tinkering with policy rates when they get comfortable with their set target of that 6% inflation. So I guess that is what is driving in, and the recent data points on inflation are probably endorsing that opinion to be formed. Having said that, what segments we like, we continue to back the private over the state-owned sector at this point of time. And the key reason here is more to do with Basel III related capital obligations. In our view, a lot of the public sector space will still need to raise a lot of resources, which will mean that growth may be much more tempered. They'll have to bring down trade growth in order to be fully funded for Basel III as and when it comes up. On the private side, our top picks clearly are, names like HDFC Bank and ICICI. So we do like the private sector space much more than the state-owned sector at this point of time.
Is it time to also top up on NBFC companies? Wholesale rates seem to be falling.
Well, selectively, yes. We are constructive about names like IDFC, but IDFC is also a fairly unique play in that it will be transforming itself into a bank. So, you may not technically label it as a pure NBFC in that regard. So that is one name that we do like. So there are selective areas that we are constructive about, but I don't see, if I were to look at the inflation trajectory, I would probably argue that you may see a period of long pause, because our target is that the economy may just about meet the 6% norm by end of next year. So our target is about 5.9% by end of next calendar. So it's not really conducive for a aggressive cut, but maybe a long pause at this point of time.
Less than 2 weeks back, the market was talking about some kind of short-term correction because of the disappointment with respect to the lack of reforms, etc. A lot has changed since then. Do you think, now those fears of a correction are out of the way and the market will resume its uptrend?
Well, if it was a pure local game out, I would probably argue with you. I would probably agree with you. But the point is that, you obviously have these global factors and the volatility that's coming through in Europe and other markets, which is probably causing a little bit of rumbles in our market as well. The ingredients are all there, inflation coming under control, external account, the current account deficit, as I mentioned, coming under control, and growth obviously starting to recover. On the reform side, I would probably say, cutting diesel was probably an easy decision to take. It's not controversial, it's not painful and stuff. I would have been happier to say that, if it had been made a little bit more, future-proof, it would have been better. In a sense, temper the extent of cut, probably build in a little bit of buffer with an excise hike, or probably along with a diesel price cut, if, there had been a token LPG hike, I would have been happier. Probably that's an ideal situation, but what is happening is probably still, there is a sense of urgency to do things, which again I find quite heartening.
Okay, have you culled out any of the IT recommendations from your model portfolio or from your buy list? And secondly, what are your best mid-cap guys now?
Sure. Overall, on the IT side, we are still selective there, and even after all the, the little bit of disappointment that we saw in TCS, that remains our top pick in the IT pack as of this, at this point of time. The main reason why we remain constructive, on this specific name is that globally we are arguing for a dollar strength, and IT should be probably, should ride that wave along with it. Coming to the mid-cap space that you asked about, we still have a preference for strong cash-generating companies, and that is something that I don't think is going to change in a hurry at this point of time. We do like a couple of themes there. One is clearly the pitch that the government is making to induce a, investment-led recovery, on which, we like names such as Voltas or a JSW Energy there on the back of those. Secondly, we like deleveraging stories. Fortis Healthcare is something that we back on that theme. And obviously certain names which are showing very robust earnings growth probably are going through a little bit of blip at this point of time because of the softer economy in the recent past. But names like, something like a United Phosphorus or something like Jubilant Foodworks are names that we like on the back of those.
All right, we'll have to leave it at that. Jitendra Sriram, thank you very much for that handful of Diwali gifts that you have given our viewers and the investors who are watching this show. Thank you very much and have a great Diwali yourself.